All right, everybody, Nicole Johnson again, and this is part 3 in my series of what are the risk factors in investing in mortgage notes. And the last topic I want to cover today is what happens if they fall behind on their homeowner's insurance. So you've got a property, it's got a house on it, and the borrower just hasn't made their payments for homeowner's insurance, so they're lagging behind. This could be a potentially huge risk for you as an investor. And since you own the note and it's collateralized against the property, this actually gives you the authority to force place an insurance policy on that borrower's behalf and force them to make the payments so they do have insurance on the property. So you have the ability to go out and force an insurance policy on that and make them pay for it. That's a way to protect your asset. Sounds scary and harder than it actually is, because what happens is you have a loan servicing company that manages your loan every month. So they take the payments, they do all the paperwork. All you have to do, they're going to notify you, hey, the insurance is lagging and it's lapsed and the borrower hasn't paid. What you do is you just tell the loan servicing company to go ahead and force place the policy for you. So what they do, they go out, they find the policy, they put it in place, they notify the borrower, and now the borrower has to make those payments or they go into default. So really not a lot that you have to do other than authorizing a forced placed policy of homeowners insurance on that property so your asset stays protected. That keeps you protected in case of, a fire, an earthquake, heavy damage. You get protected on there as an insurer on the property. Since you own the note on there. So again, investing in mortgage notes, there are some big risk factors that sound way scarier than they actually are when you break it down, because yes, they sound big, right? Like a foreclosure doesn't sound great. Falling behind on property taxes doesn't sound great. Lacking on a homeowner's insurance, that doesn't sound great. That all sounds pretty scary, but when you break it down, what you realize is, yes, these things are scary, but because your note is collateralized and recorded against the property, it gives you the authority to jump in and mitigate these risk factors to minimize your risk and minimize the risk of losing the property. So you have a lot of things you can jump in and do to protect your money and protect your asset that honestly you don't get to do in the stock market, right? Wouldn't it be great to be able to protect your asset, and if that company went belly up, that you had things in place that could protect your money and guarantee that you could at least get your note paid back in full? That would be great, but that's not how the stock market works. You put it in and you just cross your fingers hoping that company stays stable. That's not the case with mortgage note investing. You can actually take literal steps and things to protect your asset to keep these risk factors from coming to fruition. So if any of this sounds intriguing to you, we love talking about mortgage notes. We love seeing our investors cash flow tremendously every month and see the ease of just getting mailbox money every month and not having the headaches of being a landlord, and just knowing that their asset is protected with some steps that they might have to take if anything were to happen. So again, we just can't say enough great things about this investment strategy, and love helping others reach their cash flow goals easily and not with the headaches of being landlords. So if this sounds great to you, feel free to reach out. We'd love to sit down for a Zoom call, for a chat. You can buy these all over the country, so you don't have to be local, but would love to sit down and chat. I hope you have a great day. Thanks so much.